Treasury sanctions major Russian oil companies. Um, maybe can you talk a little bit about why this is so important and kind of why this kicks off the rest of what you're going to talk about today around Lukoil?
So for background here, this is a story that's been developing since October 22nd. As Cameron and I kind of record once a week, talk about the major events, the developments of what we're going through in finance, geopolitics, money, everything in consideration in this, this era of transition that we're navigating through. This story really clicked with me. We saw the headline. We haven't discussed it in prior weeks, but what's going on here and the importance of this uh, broader picture multi-week development finally clicked with me on Sunday night. A couple other podcasters, we'll get into those, dawned on me the impact this was having in bond markets across currencies globally as well over the last 3 to 4 weeks. So what happened with the Treasury sanctions? Basically, we've seen like since the escalation of the Ukraine-Russia conflict towards a kinetic activity in February 2022. We saw the sanctions go on applied to Russia, specifically targeting their energy industry, heavily focused on the natural gas, is where the headlines have hit. You think about things like the Nord Stream 2 pipeline, if you recall what happened there, sanctions against Gazprom Bank, etc. Oil was kind of secondary. It's taken a secondary role relative to natural gas at that over the course of the prior 2 to 3 years of this conflict. But in the last, let's say, 6 to 12 months since we've had a new White House administration in charge, the tightening the grip on the oil sanctions has become more and more into focus, and that's really where we find ourselves today. So prior to October 22nd, we were still finding, you could see this in headlines, Russian gas was still making it to export markets and ultimately finding its way to other countries on the open market, China, India, etc.
Relabeling
You
barrels, things like that.
exactly. So we saw like basically the net impact on the financial sector from that was Russia was still able to access, the financial markets, like the overlay on top of the actual real goods and production, like the trade of oil from the producer country to the import export markets, international trade on the high seas to the final consumption destinations. They were still kind of attached to that, and that is a funding mechanism for a domestic financial system. Basically, what we've seen over the last 9 months, or technically like 11 months of the new Trump 47th administration, has basically been a tightening down. And after, you know, all of the other kind of episodes we've seen this year with White House policy, Liberation Day tariffs, big beautiful bill, shutdown, all of that going on, this has been kind of in the background as part of the process of working towards some sort of settlement between the parties involved in this Ukraine-Russia situation. So that's where we are today. October 22nd, as Cameron has the headline up here from the U.S. Treasury's website, what they did is they gave a deadline for all of the international oil assets. So these are, production facilities, getting barrels out of the ground, to there's pipeline, other energy related infrastructure, anything that the Russian oil majors, so their version of, our own, if everybody's familiar, if you're a Western audience, like US oil majors are going to be your Exxons, Chevrons, et cetera. UK or Dutch, it'll be Shell, France, Total, et cetera. Basically, what this is doing from the Treasury's perspective, any entity from a cap table structure, which defines ownership, that has the Russian sanctioned oil companies as a member of its equity ownership behind it is going to be treated as a sanctioned party and not allowed to be interacted with in the dollar financial system so far as the US Treasury touches it. So, what does this mean in effect? If you're involved with this trade, if you're a country or a commodity trafficker, one of these trading houses such as Vital, Trafigura, Glencore, et cetera. We'll get into a background on those in just a second. You're not going to be allowed to face those in a transaction as far as the U.S. Treasury and OFAC are concerned. So all of any of these assets that are outside of Russia's, borderlines, or like that define its own sovereign jurisdiction, those have to be divested, and this is where the U.S. Treasury, made the order on October 22nd. They provided a deadline. This has to be done by X date. I think it's December 13th, but double check me on that. But basically, we're in the middle of this really tight window. We're halfway through. Like if the starting gun went off on October 22nd, we're in late November. It's November 21st as we write this. Thanksgiving's next week. Mid-December is right around the corner. Basically, what this has done is it's put the entire global oil industry. If you go back and read The Prize, the book by Daniel Yergin that catalogs the history of oil and geopolitics since the late 1800s up until roughly Iraq Gulf War One. What we're going through right now would be a key chapter event described in that book. This is a huge development in international relations and the energy industry, just bar none. This is a key milestone event, largely going underappreciated, in my opinion, in the broader discussion of what's going on in capital markets at present. So what has to happen? All of these assets, and there's a laundry list of them, mainly in the Eurasian uh, region, pipelines, oil projects, et cetera. Countries most Westerners have never heard, or like specific region or states, projects, et cetera, that most people who don't follow the energy space are not going to be familiar with. But those assets need to find a buyer. Like it's a forced seller situation. And this is where that headline coming up Sunday night when it popped up that Chevron was in the running for essentially buying existing projects where it was already taking part in a joint venture. So there's a few of those. Exxon has those as well. You'll see these development projects or asset development projects go into development with a group of different companies. Like usually they'll pool their capital, build up a project, they'll partner with each other, et cetera. And so what Chevron was, rumored to be doing in the headlines that I saw Sunday evening was any project where they were already on the cap table, which means they've presumably already done all the due diligence. Everything's just kind of dialed up, ready to go. They mentioned they'd be a willing buyer to basically increase their equity stake in certain projects. Same thing with Exxon. And you've seen other companies floated here, a lot of them U.S. domiciled, like Carlyle Group, et cetera. So that really got it to click for me Sunday evening. What's going on here and the importance? But what is likely to happen? You just ask a few questions. Well, how do you even sell these things? If you're buying a sanctioned entity, where does well, how do you
Who's
how
going
do
to actually
you
work with you on this?
yeah, who do you pay? Like, how do you settle the transaction? How do you compensate that seller for for giving up their property, right? This is where you dive into the weeds. What's likely to happen as this plays out? These transactions are going to be dollar settled. We talk about the onshore and offshore dollar. Well, not all dollars are created equal. We got to isolate what type of dollar. And what's most likely to happen, as the Treasury sees it, is that these entities then, one, the sale proceeds will go into, like, think about it as like an escrow account where those proceeds will accrue interest, et cetera, like on behalf of the seller to compensate them for their property. And that'll probably be parked at a U.S. regulated financial institution in New York, most likely. And then the bank or financial institution that handles the dollar transaction for the economic activity, like where are these barrels shipped, where do the pipeline royalties go, et cetera, those will also operate from a domestic U.S. bank. That Treasury and its OFAC arm can monitor and watch to make sure these sanctions are enforced. So on the net, what's happening here in the big picture? We've talked about this before. What's going on with the offshore or Eurodollar system? The big development underway since 2022, when we forcibly shut down LIBOR and we moved the center of gravity for the overnight settlement of money market dollars or short-term dollar financing in this global dollar credit system. We moved that to New York, right? And instead of LIBOR, when everything is just some made-up bank interest rate, not actually rooted in any market transaction, now we've got SOFR, where you've actually got, one, it's collateralized, non-rehypothecated, but also based on market pricing between banks, firms, investment companies, pensions, et cetera, who are taking place in the secured, tri-party repo market, et cetera, to come up with this overnight index rate, to come up with a cost of dollars on a short-term basis. So what that's effectively doing is it's pulling the power away. What domestic U.S. policy is actually doing is taking the keys away from this dollar system, away from the rest of the world, and bringing it into the domestic U.S. And then you see that same thing happening with this U.S. Treasury sanctions order on Rosneft and Lukoil. What this is representing, it's one step. It's pulling the oil, dollar-based transactions from other global money centers where these numbers are printed. It's pulling them into New York or U.S. regulated financial entities. So it's part of that broader trend. You think about the meme you see going around, the death of the dollar, de-dollarization. I think from our point of view here on our weekly roundup and our soon-to-be rebranded, weekly title for our show, like one of our themes we got here is this isn't the wholesale death of the dollar, period. It is the death of one type of dollar, however. Like, it's this offshore dollar, this legacy post-World War II, rehypothecated, under-reserved, all of that dollar that's being sucked in or reined in towards the domestic United States, where policy, interest rates, all of that can come under the purview of U.S. regulation. So how do we know this is a big deal? What would you be looking for? I always say follow the market signals. So if you want to do some just very crude TA here, this one is crystal clear and obvious. If you look at the Lukoil stock price on the Russian MOEX exchange price, this is priced in rubles. You can't trade these if you're in the U.S. They're under sanctions, so you won't even see these prices from your U.S. broker dealers for the most part. If you go to Lukoil's website, they present this chart. What you see there, this is a 3-year or a 5-year look back window. And you see Lukoil stock price, right, starting, throughout 2023, you see this just rally, right? But from 2024, Jan 2024, up until today, you've got a very clear downward sloping support line. It's been hit 1, 2, 3, 4 times, tested as support, rallied off of it each time. The first 2 times, after the first 2, you did see the final higher high, but every other time after it's tested that support line, second time, lower high, That's a bear market indicator. Then you get another lower low, another lower high here, August, midsummer era. And then on this news, October 22nd, when you get that OFAC sanctions declaration issued, break the trend with selling, and then you see it confirmed by volume. Um, Volume you're looking for as a signal to confirm the price trend. It's secondary. You look to price first, but both of those two things, price and volume, and that clear break of the trend line. This thing is very serious, like to the Russian economy. You've heard key Russian figures like Vladimir Putin or the oil company execs have mentioned this action will probably lower revenue flows into the Russian oil majors by ballpark 30%. So that's a serious number here. That's pulling away, in the global landscape of capital flows. That's pulling away a massive amount of capital flows into the Russian economy, which is really like an export commodity dependent financial system. So that breakdown in Lukoil is confirming, if you're a technical analyst, it's confirming kind of the seriousness of this issue if you're looking for that signal. All right. So next thing to happen here, this was 2 weeks ago. We didn't talk about this either, but you've got these trading houses, right? And kind of got to this earlier. These trading houses are basically the man in the middle who connect the producer. So let's say this oil is coming from like the Baku oil fields, which have been in development for like over a century. They're in like the Caspian Sea region, all of that. You get those oil-rich, assets, and the producers bring those to market. Someone's got to buy from the producer and move the cargo to its final consumption market, which may be, India is where the oil tanker drops off his cargo. That man in the middle is going to be your commodity trading house, is generally what they're called. They're your Vitals, Trafigura, Glencore, and then there's number 4 on the list. Fourth biggest in the world is Gunvor, and it tends to be aligned with Russian interests. But what these firms are is, in the technical sense, like in the actual sense of the word, marketing, right? The word marketing, or the field of marketing, in modern American times, right? If you find someone who went to business school and did their degree in marketing, a lot of stuff they're going to learn is, hey, how do you pitch your product, or present your features of your own widgets to the consumer market and get them to buy your stuff. It tends to be almost, you think about a marketing agency these days, what we call them. What do they do? Advertising campaigns. Think back, like in the world of commodities, you get back to the truest sense of marketing and the definition of the word. It's finding that like consumption market to match with the producer, and then you connect those two endpoints, and then you capture the spread. That is the business of marketing, and I think it's most apparent in the oil trade, just because it takes place so much on the high seas with these massive tankers. Um, so on November 7th, the Treasury, like the first reaction from Rosneft and Lukoil was, oh, we'll sell them to Gunvor. U.S. Treasury comes out and says, no, we're not going to do that. Not going to work. Never going to get a license. Since it's over a dead body, right? So that got rejected, and that brought us into the state of play where we began this week. The prior 2 weeks, it's basically been the rest of the oil industry, as well as the private capital industry, has been in, just shotgun due diligence phase, going deep on these deals to determine, all of the hair on the situation and how they're going to put their capital at risk to ultimately comply with this policy directive coming from the White House. Um, Cameron, any other thoughts on that
Nope.
matter? Do we want to go into the um commodity traders a
I
little
was gonna
bit,
say,
or
I think
maybe skip to
for
that?
me, what would be helpful is, I know you put together a little bit on this, but how does Gunvor fit into the other set of traders, right? So it isn't immediately clear to me why they were targeted specifically beyond the headline of they're accused of being working directly or with Russia, right? So what makes them special versus the other options that are out there?
Yep. So these trading houses, especially in oil, you've got, five big ones. You got Vital, Trafigura, Glencore, Gunvor is fourth, and then kind of an upstart called Mercuria. Um, these four out of the top five are based in Switzerland, right? So there's a reason for that. Like it comes down to tax policy, public policy. It makes it a very favorable environment for these businesses to domicile there. But in terms of the capital base, like this is an industry where like the nation state alignment and geopolitical alignment is very key, right? Because if you think as a nation state, think about your bond market, your credit market, your consumer prices, inflation. A lot of that is dependent on can I get the commodities my economy needs at a good price to keep prices stable, right? If you don't have that, it's tough. It's very difficult to support a functioning bond market, which is why you really see a lot of these trading houses aligned to some extent with kind of a nation state influence, or even maybe just a political or capital power faction within a nation state. Um, so I mentioned the top five. Gunvor is number four, and it's also one of those that is operationally headquartered in Switzerland. Now, in terms of political alignment, you know, maybe just take this as this is Perplexity's summary of each situation. These things are very hairy and complicated. It is a very complicated industry. Most of it takes place on the high seas, and it is of very high geopolitical importance for all of those reasons I just mentioned. For the role of commodities access for a nation state's economy. So each one of these firms will have some sort of, political environment, or it could be multiple. They might sit in the middle of a lot of worlds. So I won't go through each of these here, but each one of these has its own. I'll say one that's, stands out in this case. Gunvor is alleged, uh, according to the U.S. Treasury, to be a Russian state proxy. And if you look to that, you look at the geopolitical character, say it's Kremlin aligned, despite, there's been some ownership or transaction sales. On the back end, these tend to be owned to a large degree by the um, managing members or like active employees involved in the trade. So this is very complex, but you're getting into like the nuts and bolts at the heart of global trade when you look at firms like this.